Hello, everyone. Thank you for joining us. Really nice to see everyone. I'm Chris Fay, Head of Comms at YAP Global. Really excited to bring this panel to you today with Ryan, Henry, and Usman. I will just let each of them just introduce themselves briefly. Ryan, do you want to jump in quickly?
Yeah, sure. Thank you. I'm Ryan Gorman. I'm Chief Strategy Officer at Uranium Digital. We are the only institutional spot market for trading uranium, and we're built on Solana.
Hello, I'm Henry Duckworth. I'm the founder of AgriDEX, which is a digital marketplace for agriculture, using blockchain to allow people to trade food and agriculture around the world.
Hi everyone, my name is Usman. I'm founder of Oro. We're bringing yield-bearing gold to Solana and to crypto.
So we've got a good variety of different real-world tokenization happening here. So I'm going to jump in. We're going to start by talking about the big questions, I guess. Why tokenizing real assets makes sense now? So should we start with you, Harry? What's the most frustrating thing about traditional ag markets that tokenization actually solves for you?
Yeah, I guess the main thing for us is friction. There's 193 countries in the world. Every single one imports and exports food. And what that means is that you have thousands of different currency pairings. You have hundreds of different legal instruments and jurisdictions. And there's no unity, which is weird because the food that we put in our bodies is all singularly the same, no matter where it comes from. So what I would say the hardest thing is friction. It's friction.
Friction, yeah. And Ryan, uranium, a very complex and closed-off market. What's the biggest kind of aha moment that you've had and showing people how it can be opened up to RWAs?
Yeah, absolutely. So I guess in order to illustrate that point, first it makes sense to take a step back and consider how uranium is bought and sold right now. If you're Fay Power, you're a nuclear power operator, you want some fuel for your reactors, you put out an RFQ and you'll take maybe a month or 2 months to get quotes through forward sales contracts. And those quotes don't match the price that's quoted daily, which we can get into later. And then it would take an inordinate amount of time for those forward sales contracts to see delivery of the uranium. So it's a really long, drawn-out bureaucratic process. With Uranium Digital, each token is physically backed by 1 pound of uranium, and it can trade on a spot market, so there's more efficiency, price discovery, and because the uranium is physically deliverable as well, you can buy the Uranium Digital token, you can have that uranium, and as long as you meet KYC, KYB requirements, and you're not on an OFAC list, it's a near instant transfer of the uranium at one of 3 conversion facilities globally. So it's immediacy, speed, efficiency, and it's just a much more efficient process than currently exists.
Good way to sum it up. Usman, gold's been traded for centuries. What's still broken? And why is tokenizing on chain going to fix it?
So I think when we think about gold markets specifically, they're just running on very old pipes, right? Institutional markets, 2 big ones, London and New York. I think 80% of trade passes through institutional trade passes through those markets, but they don't really speak to each other. Settlement periods are T+2. Very closed up, opaque markets. If you're a big bank, you can access it. Not really accessible for everybody. On the retail side as well, gold actually is not as accessible as people think it is. Access is quite restricted in large parts of the world, largely due to government restrictions on gold imports, high taxes, infrastructure that doesn't exist to support gold retail markets. And so to be honest, when I sort of look at tokenized gold, it's already been tokenized, right? I think for us, it's what are we doing something that actually adds more value, because my core thesis on tokenization is that, or at least real world assets tokenization, is that you have to unlock way more utility on chain for it to really achieve escape velocity or product market fit. That's what stablecoins have done for dollars, and hasn't been done for gold yet in that instance. And so for us, it's really about 2 things. Hey, let's get more wider accessibility, and that's a more distribution point on how you build the tech around that. And then part 2 is more about how could we make this asset just better on chain. And I don't think that's much difficult, because the unique rails of crypto, especially when you build in the right ecosystem, can unlock huge ton of things. Yeah.
But isn't that one problem that I guess all 3 of us encounter, but so many businesses do, which is legacy banking infrastructure?
Yeah.
payments being incredibly slow, payments being expensive, being debanked. I don't know how it is with uranium, but certainly if you're dealing in the wrong countries, even in agriculture, there's sometimes the risks of your bank accounts being frozen. I feel like one of the big joys of building in crypto and that I found building with Solana is digital stable coins by effectively allow you to leapfrog over historical banking rails. I mean, that's been my experience.
I mean, in uranium, since it's such a highly regulated market, we're dealing only with institutions, right? It's not a retail market. We're dealing specifically with uranium trading houses, large financial institutions, and power grid operators that need the fuel for their uranium. So I think it's a little bit different than most markets. I know you're an institutional product as well, but everything we do is very compliance forward, regulatory aware, and I think in terms of like debanking and worrying about things like that, wouldn't necessarily happen to those using our platform, but I could see that being an issue in the part of the world that you're operating in, and definitely in some aspects of the global market as well.
Awesome. So we're all here for Solana. Let's talk about why Solana. Like, what tools and stuff are the things that make it the perfect place? Do you want to start, Harry?
Yeah, sure. I mean, for us, Metaplex was incredibly important. Being able to mint NFTs and build contractual arrangements around that. I think one of the biggest things about SPL tokens is giving people access in a way that there hasn't been before. A lot of stuff that we do is built around is obviously built around payments. So anything that's coming out around PayFi is incredibly interesting to us. And I'm part of the reason that I'm here is I'm really excited to speak to some of the people who are building new settlement functions.
Awesome. And Ryan, speed and data matter for Uranium Digital. How does Solana help you keep the prices and trades accurate in real time?
Absolutely. When you're considering different blockchains or different protocols to build on, Ethereum may have the majority of RWAs, but it gets network congestion, fees can spike, go down, they're not consistent. And it can sometimes take a while for a trade or a transaction to process. With Solana, it's just near instant, super cheap, and you don't have to worry about the network congestion that you do on Ethereum. And on top of that, just the Solana community as a whole. When we started building on Solana versus building on Ethereum, the enthusiasm around the project and the support we've received from fellow founders and other people in the ecosystem just blows out of the water anything that we experienced when considering other places to build. So I think it's a great community, and we're really happy to be part of it.
And Usman, for people thinking about DeFi integrations, what's been the easiest part of building on Solana for you, and what should new builders watch out for?
I think it's really the community, to be honest. I mean, Ryan already mentioned it, but when you have, it's a big ecosystem, right? But people still get very excited and cheerlead for you, and that always comes with, hey, we really like what you're building. How can we work together? And so instead of there being this Herculean BD outreach effort, I would say 90% of our integrations, or even 95, I've just been inbounds, right? It's just been like, hey, when are you launching? We want to integrate. And so I think that's really kind of that's one of the things about the best about the ecosystem, which is everybody's there to help each other grow the pie. Not very much a PvP mindset, right? It's just like PvP is just like, let's help each other, let's grow. And that's kind of and for us, it's such a key part of the story that what composability can do for assets and for tokenization. And so for us, that's just, it's been easy to kind of, to the top protocols, right? Literally, people who I don't know, and then I'll have like the founders of X protocols, like, hey, listen, when are you launching? Can we just do this ASAP? So that's just been great. And then they'll set up groups with their teams, and I don't have to go through that whole process of finding them. It just happened naturally.
I think that's something that I've really observed with you three in particular over the last 3 days is like just the support. Like everyone really backs everyone, listens, supports, advises. I think it's a really, really good thing that I've observed, particularly on this panel as well. So I think let's just have a little chat about the credibility and user trust as well. I'll come back to you actually, and maybe we'll talk about the fact that compliance isn't sexy, but it is crucial. What's one smart move that projects can make early to stay on the right side of regulators, do you think?
Smart move, I think finding like really good lawyers, because the reality is that a lot of crypto still operates in a gray zone, and you need to, I think that's probably one of the mistakes that we did, where you kind of go with lawyers who don't necessarily understand, who get crypto law, but don't understand the operational aspect of it, right? And you need people who are able to sort of marry the operational aspect with the legal aspect, and which means that can build a good product with a good UI and do what you need to do for the users at the same time being regulatory compliant. And so I think that's definitely one advice I would give, because foundationally for everything we probably do, that's like the base layer, and you have to set it up right from the get-go, even if it takes time, because if you don't, either you lose trust in your users, maybe they don't believe that your asset exists, or you'll get into trouble with regulators, or you'll get into trouble with your partners, because I'm sure like all of us are using vendors for settlements and whatnot. And so foundationally, you need to build that right from the get-go. Otherwise, you just won't be able to build a good product, I believe.
And Harry, AgriDEX uses NFTs in a cool way.
Yeah.
What's one tip that you'd give builders here for standing out and building their trust?
Well, so I think a lot of certainly our journey in AgriDEX is by being like a sort of very much a founder-led project. It was talking to my experiences that the reason I built AgriDEX is I came from a multi-generational farming family. I grew up in Zimbabwe that was once a great producer of food and then fell asunder. It was always something that was part of my being that I wanted to help. And I think that's always helped with signaling. In the same way, a lot of builders, I think, need to be true to who they are. Keep on signaling why you're building the product, what it is about it that excites you, and then people will probably have the right feedback loops from that. So I'd say just be very open about your product, why you're doing it, and even if you're not very sociable, you've got to use your Twitters, you've got to use your LinkedIn's, you've got to use your formulas to reach your audience, because unless you're building a product that's totally self-financed, you're going to need to reach out to other people.
Entering founder mode.
Yes, exactly that.
And Ryan, like Uranium, tackling quite a niche product and an asset. Like how do you make something like Uranium feel credible and investable to people in the space?
So I think, again, with the uranium market, one thing that enables us to build trust with the institutions that we talk to is the fact that the majority of us come from the traditional financial background. I worked on Wall Street for a number of years. Our founder comes from one of the largest commodities trading houses in Canada. It was initially his passion project. He wanted to, express his opinions in the uranium market, realized he couldn't, and here we all sit. And then, other members also work in large traditional financial firms. And when you have backgrounds like that and you're talking to these people, and then you also use something like a Chainlink proof of reserves Oracle, where everything is immediately auditable and viewable and everything is transparent and open, I think, having that similar background, talking their language, and just showing them, oh my God, you can trade uranium like any other asset now, and it just works. Right? I think that was key, because the response that we've had has been so overwhelmingly positive. It, largely outstripped any of our rosiest projections, to be quite honest.
Really?
Yeah.
So let's talk about timing in the market and how you can spot opportunities and how others can spot opportunities as well. Harry, I'll come to you first. There's a lot happening in global trade. What do you think 2025 is? And why do you think 2025 is a particularly smart time for building RWAs?
Well, I think most of our projects all benefit from the idea of providing better access to pre-existing products. And I think with an increasingly multipolar world, it is getting more and more difficult to trade. We're going from this quite unified trade and setup system to something that's incredibly fractured. And whilst that's not necessarily great for the wider world, it is great for products that are built to remove blockers and to remove friction and built to provide unity. So in a sense, even though things are becoming a little bit more difficult, especially in the world of tariffs, for what we're building, it's inverse, because the more difficult it is using historic institutional plays to move around commodities, the more we come into our own. And I think that's not going away. You're going to see the rise of several different currencies. So why not have a digital one? I think that there's going to be an increasing amount of various other stables, much more localized. You're going to see local African stable tokens. You're going to see local LATAM stable tokens. We're actually already talking to the government of Ghana about helping out on a stable coin from that region. So I think for us, it represents a great opportunity, even though there is a huge amount of global friction and insecurity.
Yeah. And Ryan, energy and politics and supply chains, what's the biggest trend pushing interest in uranium or other niche assets for you right now?
Sure. So when you look at the uranium market as a whole right now, there's about a 25% delta between global demand and annual supply. And you couple that with a pledge about a year and a half ago by the world's leading nations to triple uranium power capacity by 2050. And then on top of that, you also have, AI and data centers and all these other players in the tech industry who are increasingly looking towards nuclear power to power their data centers and to be the engine of, AI as it, proliferates globally and throughout our lives, and enabling there to be a more efficient way to access uranium and over the longer term hedge against price risk in a way that just isn't possible. I think, that to us is what differentiator is and what's, really helped drive our engagement and adoption.
And Usman, gold tends to shine through tough times. What market signals should people watch out for if they're thinking about launching or backing RWAs this year?
I think there's like a really, all the narrative macro trends around gold are amazing, RWAs, etc. But I think there's a lot of emphasis on market conditions. As a founder, you're not really building for one market. We can't really predict what's going to be happening this year or the next year. There's these crazy shifts happening in the political landscape and the economic landscapes. But I do think I think the biggest shift is it's just about distribution of RWAs, right? And I think when you're specifically thinking about the current subset of users on chain, I don't think that's the subset if we want to build large, big, let's say, billion-dollar companies. I think the biggest trend is fintechs and neobanks across the world who are effectively have huge user distribution from whether it's a Revolut or a new bank to the smaller players. They're becoming very crypto friendly. And I think what that does is it opens this insane amount of pathways to users who want assets. Frankly, they do not care whether it's crypto or not crypto enabled or not crypto, they just want access to those assets. And so I think, for me, that's the biggest trend, because reality is that prior to that and prior to maybe why real assets haven't taken off in the big ways, because crypto startups have had to really go and find those users outside of the usual subset of on-chain users. And that's just been challenging, right? Because either the rails don't integrate or you just don't have willing partners. And now I think that's changing. So for me, it's like the most bullish signal for RWA founders is you've got this wider Web2 TradFi world, which is integrating into crypto, and that just opens insane amount of opportunity.
I think more to that point, though, abstracting away a lot of the aspects of the crypto user experience, which admittedly isn't really all that great right now.
Yeah.
Abstracting those away and making things look similar to how they look in traditional markets gives people that warm and fuzzy feeling where they're not worried about seed phrases, they're not worried about sending funds to a wallet and never seeing it again, I think. And that really is how you bring those institutions in. They may be becoming more open to crypto assets and using blockchain technology, but it has to be something that they are able to use. It can't be all these hurdles that have been put in place, however well-intentioned, it's just not the best user experience.
Exactly. I agree. Actually, like when you think about, I don't know how many of you guys use Moonshot, right? And like how easy is it to buy memes using Moonshot? It's like, frankly, I don't even know it's crypto or not. And I think that's what it's going to come for. I think the future apps will be crypto super apps, but nobody's going to know it's crypto underneath the hood. And it's like, I'll be able to maybe it'll have KYC, maybe it'll have KYB, but then it's like, I'll open my app and I can access the most amazing assets in the world at really good prices with tight spreads, and then they'll be alongside all the benefits of tokenization. And I think that's what the future looks like, at least from a consumer point. I think even at the institutional lens, you have, like what Ryan's doing and even what you guys are doing. And maybe at some point, we had this institutional angle for gold as well. But I think even there's going to be, you have to, from an institutional point, I think the rails need to be still better because orchestration rails are still not, you have a few players, right? But I reckon there's a lot of new users in the market, new companies in the market trying to build out those on-ramp and off-ramp rails. And I think once that builds out and you have cheap, because currently, let's say when we're speaking to vendors, off-ramp rails can be quite expensive. You have Bridge in the US, which is good, but generally in businesses, which I don't know, again, the margins, but in gold business, which is tight margins, if I'm looking at off-ramp or on-ramp margins of like 50 bips. It's like, dude, that just...
It's the single biggest thing
Exactly,
in our
right?
business is the single biggest business risk. The fact that some areas it's 0.2%, 0.1%. And the strange thing is, and no offense to throw any on or off ramper people in the room, but the strange thing is it's pitched to you like it's a very compelling narrative. That's you saying, oh, well, we can bring it down to 10, 15 bips. And you're like, well, that's far more expensive than any institutional group would ever pitch you. And I think there's, to touch on exactly what you guys were both saying, like, one risk is the expense of on and off ramping, but the other is exclusionary language. Like one of the amazing things about crypto is this kind of evangelism that has encouraged so much passion, but we're forgetting that we're using terms that the rest of the world don't understand, and it's actually excluding them from wanting to do business. You know, we try very deliberately with AgriDEX. We suffered from it so much that we actually had a separate website for onboarding real users, because the problem is people would go onto the first site and you would use all this language that your average commodities trader doesn't understand.
Exactly.
And actually they see it and they now feel excluded, and no one wants to be part of a club that doesn't like them. So suddenly they move back, and you have this total antithesis to it.
That's really interesting that you've got kind of the dual website as well.
Yeah, no, it's two different websites, two different names.
Yeah.
But I mean, can you imagine going and pitching a 60-year-old farmer who doesn't understand blockchain? You've got to show them the benefits of it, and exactly what Ryan was saying about abstracting away products that would put them off. Ours is built to look and operate like a trading platform, built, the banking experience and the payment functions are built to look like your, kind of retail banking institution setup, because otherwise that's what people are used to.
Yeah.
So let's talk about making RWAs valuable beyond just tokenizing them. I think we've touched on it a little bit there, but Harry, should we start on lending, trading, and yield? How are you giving your tokens real world utility, and what can builders here take away from that?
So I think there's always a battle with aligning interest and attention with any kind of token or product. I guess we all battle with that on a daily basis. A big thing for us is we're building in the mechanisms for people to be able to stake their token to provide capital towards some of the traders and exporters that use our system. And it's quite interesting because you'll have somebody like a sugar trader from West Africa, and they're selling to Coca-Cola, but Coca-Cola only pay them back in 90 days. What you have is a receivable from Coca-Cola that's never going to not be paid. But these people are happy to take a reduction in price of, say, 1%, 2%, or even 3%. So suddenly you're able to offer a yielding mechanism of 1% a month with an incredibly low risk profile underneath. Now, I know with some crypto products, they've been paying 30, 40, 50% yields, but I just don't think that that's realistic, at least me personally. I think now that we're coming into a settling of the current market conditions, there is going to be a drive not just to value, but a drive to reality. And I think what we're trying to do is represent yielding products that are underpinned by something in of existence. It's not a fugazi.
Yeah.
And Ryan, there's a lot of talk about RWAs being useful for hedging risk. How do you approach that, and what's realistic for teams building today?
I think when you're considering how to hedge risk, you have to consider the audience you're talking to. As Harry said, if we went to a bunch of, older, Gen X uranium traders at some of these more buttoned up institutions and told them, hey, you can get like 200% yield on your uranium, they'd laugh us out of the room, right? So I think, with the token, you can take the uranium token to a lending market. And you can generate a yield of like maybe 6-7%, something like that. And instead of having to pay annually the storage cost of the uranium, and the uranium being kind of like a sunk cost to an extent until you move it, you're now able to generate yield that kind of balances out that storage cost, and then also provides a bit of a return on the back end. And I think being able to do something like that is just mind-blowing to a lot of these guys that we're talking to a lot of these traders. And then also, when you have a much more efficient spot market that actually has a stable price feed, you're then able to start looking at, okay, how do we create derivatives, right? CME open interest on uranium derivatives is 0. There's a quote, but no one's ever written a contract because there's no physical delivery. Having the physical delivery now enables derivatives to be built. So I think there's a whole world that we're unlocking value, as you said. We're creating much more value and opportunity by bringing uranium on-chain in a way that TradFi markets and market structure just can't enable right now. It's just not possible with traditional financial rails.
And Usman, yield's a big draw. What's the key to offering returns that are actually sustainable and not just hype?
I think it's kind of similar to what Harry said here, right? Attaching your yield to real yield, which is being generated, is super important. The reality is that I think tokens are quite a strong incentive tool, but they're definitely not, sustainable for the long term, right? Because if your yields just come from emissions or some sort of speculative activity, then that's not, I would say, strong yield and consistent yield. And especially as we want to bring institutions on board and more, let's say, normie capital, they want to see stable yield, right? Nobody wants to be like, hey, this is what you're getting today, but it might be different in 6 months' time, because they're obviously making capital decisions on data and what's being projected. So I think a lot of it is just focusing on real yield. I do think if you have a portion of real yield and maybe some element of token incentives, that becomes quite a strong proposition. But there has to be an attachment to real yield, and I think all of us are sort of trying to bring that. And I think it will become more and more. It's quite boring, because reality is that people are used to sort of these crazy returns in the markets, when if there's an AI market craze or meme coin market craze or whatever's a hot narrative at that point in time. But I think it's the more sustainable kind of longer term business model. I mean, Tether and StepFinance are the best examples of that, right? Their business models are underpinned by boring treasury yield returns, and they are the more Tether's the most successful crypto business, right? So really, I think that's what it should show us. That that's what's building sustainable long-term businesses. The speculation stuff is sexier at the short term and might excite your investors and pump and dumps, but if you're here for the long term, then you got to focus on this long-term yields.
I always think boring is good, because it means you have to think more creatively about how you talk about it and how you do it. I think that often for founders gives them more of a challenge as well.
I think more defensible as well, by the way, because boring usually just means a lot more structures and costs and stuff, and it's probably more defensible.
I think the boring bits are often the most important ones. Is that right? And not being loud and doing crazy things like offering triple-digit yield, I think, is how you also are able to establish legitimacy among serious people, serious firms in the market.
I'm going to ask you all to go into your crystal ball and into your founder mode heads here. So we can talk about the future, what's trends coming down the line and everything. So Harry, what's one Solana feature or tech trend that you're most excited about over the next year, and why should builders here care about it?
Well, yeah, I mean, the range of token extensions, some of the stuff was promised and wasn't delivered on time, but we know it's coming. I think token extensions holds a lot for us going forwards. And then obviously PayFi. I mean, it seems like this isn't necessarily just a Solana product, but an overarching model is the fact that both Circle and Tether are coming on the top end of banking infrastructure, almost surpassing it now. And I think that's something that's only going to get more and more large in the coming months.
Awesome. And Ryan, if someone's thinking about launching an RWA project, what's one underrated strategy that's helped you the most?
It's a great question. I think, finding people who are as passionate about what you're building as you are, and, having them be out and being your advocates and talking to your audiences, because while founders should lead most communications, it can't just be them. You need to have more people who feel the same, who believe the same, and who, can, preach that gospel and get you out in front of as many people as possible, because you're going to get many no's before you get yeses. And just having that persistence and that determination and drive, I think, is what's been most important for us, for sure.
And Usman, you've built something that lasts, but what's one piece of advice you'd give builders who want to stay relevant over the next 3 to 5 years?
I think specifically actually wider crypto space, don't chase narratives too much. We get too distracted by these short-term narratives. Have conviction in what you're building. That's super important, and those things phase out over a longer same period. Specifically for RWA builders, I would say just don't focus on the aspect of tokenization. I think that's a commodity. Anybody can frankly tokenize anything. Think about what you're bringing and what networks are you attaching this up to, because that's really gonna build a flywheel that's gonna sort of generate real economic value for you, your investors, for everybody. So yeah.
Awesome. Do you have something to add there?
No.
Oh, no. We just got a couple of minutes left. Give you each, if you take a sort of 30 seconds just to add any final thoughts. Ryan, do you want to start?
Sure, thanks. Building on Solana and, being part of the Solana community, having great friends like Harry, Usman here, who I've gotten to know quite well over the past 6-7 months, I think has been such a change from, when we were initially building on Ethereum. And I think, I can't imagine us having the interest or the engagement or the adoption that we have on Solana through any other blockchain. So I guess just that. Happy to be part of the community.
And I think I'd echo those sentiments, despite the fact that we're all building technological products. We are sociable animals, and it's nice to be able to sort of all be together. And it's incredible what you can find yourself sharing over a coffee outside or going for a drink down the road. So I would encourage everyone. Certainly, my experiences into blockchain crypto started with Solana. And it's been an incredible experience because we've been so sociable and because people have been so helpful to each other. And I became good friends with Ryan, and I've invested in Usman and his project. Like, it's just been a wonderful journey for all three of us, and it's come out of a sense of community.
I mean, there's not much more that these guys have covered here, right? But I would concur all what's been said, I think. I mean, actually, funnily enough, my journey in crypto also started on Solana. So I'm like, I think for me, it's like, it's such a testament to entering a new industry. I mean, that was just last April, by the way. And to be able to kind of hear people who don't know you, understand your vision. It's like, okay, this is what you can do, fund you. Then you find your like-minded peers who you can, who may be a bit ahead of you, and there's so much to learn from. And I think that sort of, and then you kind of have like in the community, and it's been wild for me as well. It's like, I was in Paris a couple of weeks ago and somebody came to me, he's like, hey, is that you on the Twitter page? And he's like, oh, I'm really excited for what you're building and when you're launching. And then likewise here. So I feel like that's just testament to, I think, just what's the founders, apps, and tokens, right? The FAP thesis, and that's really what Solana's about. And I think this is all a testament to that.
Well, I want to say a big thank you to the three of you for joining me today, and thank you all for coming. Hopefully you've learned something and you've got something to take away here. But yeah, thank you very much all for your time.
Thank you.